All right, so let's take a look at how we fill out this 1040 form using Schedules A and B. Remember, a 1040 form is meant to cover all possibilities for someone's financial life. And so all kinds of different things can be covered by a 1040 form, especially when you start adding in the different schedules that can go with it. We're mostly going to focus on Schedules A and B. Schedule A allows us to itemize our deductions, which we'll see in just a second. Schedule B allows us to list out any interest or any dividends we're earning from stock investments. And so those are more common kinds of things that a particular taxpayer may need to pay attention to. But there's all kinds of schedules for things like being self-employed, for earning income in other ways besides wages, like maybe through rent or something like that. And so the schedules help to take care of all the different possibilities. So we were looking at this scenario. We have this information on the O'Sullivan family, and we want to use this information to fill out their 1040 form and, where necessary, to take a look at the schedules that will help us to fill this out. So we're going to start with the information that Margaret and Brian O'Sullivan are married. And so we're going to assume that they are going to be married, filing jointly. Okay, and we also have the information that they have a child whose name is Carol. So the first thing that we can do is go to our form and fill out the information section. Okay, so we've got Brian O'Sullivan, and we've got Margaret O'Sullivan. Now, we don't actually have the W-2 forms in front of us, we just have information about the W-2 forms. So we don't really have social security numbers, we'll just continue to use zeros like we have with our other forms for both of them. And we also don't actually have an address on them, so you can just make one up. I'm going to say they live on 254 Main Street. Anytown, Texas, 1, 2, 3, 4, 5. Okay, we're just making something up because we need some sort of an address for this family. There's no information that says that they have any foreign address or that they're earning any money outside of the country, so we don't need to fill in that line, and we're going to pass on the presidential election campaign contributions. Okay, so for filing status, we just said they're going to be married, filing jointly, so we'll check that box. And then for the exemptions, again, make sure that you read what's on the form, because the form says different things different times. Sometimes you check if you are claimed by someone else. Sometimes you check if you're not claimed by someone else. That was one of the things that was a bit confusing on our quiz. Okay, in this case it says if someone can claim you as a dependent, you do not check. Okay, so based on that, we are going to check because we are assuming that as a married couple, no one else is claiming them. So we will check for both Brian and Margaret. And then for the dependents, we'll put their daughter, whose name was Carol. Social Security for her. Her relationship is daughter. It says in the last column, check if child under age 17 qualifying for child tax credit. We have no information that that's true, so we are not going to check that. And so then we fill in our boxes here. So the boxes checked on 6A and 6B, that would be 2 of them because we have both you, yourself, and spouse. The number of children on 6C who lived with you, we are assuming that Carol lives with them, so we'll put 1. There's no information about any children from a divorce or separation. There's no dependents that have not been included above, and so we now have a total of 3 to put in the box. All right, so that takes care of the personal information section. Okay, now let's go back. Let's see what we find out about income. So we're being told that Margaret works for a sports cable station. Brian is the cameraman there. They have combined wages of $76,521. We're also being told what the employer withheld, but we're not at that section, so we don't need to pay attention to that at the moment. And so back to our section here for income. We're going to start out with our wages, which was the $76,000. Go back to blue here. $76,521. Let me see if I can make that a little thinner. That seems kind of thick. Okay, 76,521. Then 8A is asking us for taxable interest. So if we go back, we have information from the 1099 form, which is going to be information about interest and dividends and things like that. Okay, so we have information that they have $812 from Seaford Bank. They've made $877 in interest from Buffalo Bank. They've also earned $444 in dividends based on GM stock and $1,200 in dividends from Kodak stock. Okay, so when we go back to our form here, our taxable interest has the Schedule B listed with it. So we're going to go to Schedule B, which look like this. And basically there are 2 parts to this. There's the interest part and there are the dividends part. In the interest part, we need to list the places from which we are earning interest. Okay, so list the name of the payer. If any interest is from a seller financed mortgage and the buyer used the property as a personal residence, see instructions on the back and list this interest first. Also show that buyer's social security number and address. Well, we don't have any of that kind of situation. So we're just going to list the 2 banks, which was the Seaford Bank and the Buffalo Bank. From the Seaford Bank, they earned $812 in interest, so you need to make sure that that's on the line that's right across from that. Okay, make sure that they match up. And from the Buffalo Bank, they earned $877 in interest. So for number 2, whoop, went a little too far here. Notice that? Oh, what's going on? We got craziness happening. Hang on a sec. Okay, let's try again. centered back up. Sorry about that, guys. Okay, so if we go down here to number 2 then, we are supposed to add the amounts in line 1. Well, that's all of this. This is all line 1. And so that's going to give us $1,689. Okay? And then it says in number 3, excludable interest on Series EE and I U.S. savings bonds issued after 1989. No information about that, so that'll just be 0. And then for number 4, we subtract line 3 from line 2. So we're still at 1689. And then it says this is going to be entered on Form 1040A or Form 1040 for line 8A. Okay, so we go back to our form. Line 8A. Oh, a little too far. Line 8A, we will put our $1,689. That's what we've earned from interest. 8B is asking for tax-exempt interest. We have no information about that, so that'll be zeros. 9A is asking for ordinary dividends, and again, Schedule B is referenced, so we'll go back and do the dividends part. Dividends are part 2. Okay, and so the same thing, we're going to list the payer, so list the companies that you're getting dividends from. So we had GM, where we earned $444, and we had Kodak, where we earned $1,200. Okay, line 6 says to add the amounts from line 5. So again, all of this is considered line 5. And so when we add 444 to 1,200, we get $1,644. And they tell us to add that to line 9A. So we go back, line 9A, and there's our $1,644. Okay, 9B is talking about qualified dividends. We don't have any information about that. But if we go back to our Schedule B for just a second, notice that at the end of Part 1 and at the end of Part 2, there's a note. Okay, and what this note says is, if line 4 is over 1,500, you must complete Part 3. Same note down here, if line 6 is over 1,500, you must complete Part 3. And we've got it on both counts. Both line 4 and line 6 are over the $1,500 mark. So we need to go down and fill out Part 3, which is basically just asking you, are you keeping any of this money in overseas accounts? So 7A says, at any time during 2015, did you have a financial interest in or signature authority over a financial account, such as a bank account, securities account, or brokerage account, located in a foreign country? Now, for them, there's no information, so we're going to say no. If it was actually me personally, being a teacher who lives and works in China and has a banking account in China, then I would have to personally check yes. But for the O'Sullivans, we're going to say no. Then it tells you what to do if you checked yes. We can ignore that. Part B, if you are required to file the FinCED that they were talking about up here, well, we're not, so we can ignore that. And so then we go to number 8, and it says during 2015, Did you receive a distribution from, or were you the grantor of, or transferor to a foreign trust? Again, we have no information about anything foreign, so we're going to check no on that. And now Schedule B is complete, and you would attach this with your 1040 tax form when you mailed it in. Okay, back to our form now. Let's see what other kinds of income they're asking us about. So we've taken care of wages, we've taken care of interest, we've taken care of dividends. Now, as you read through the rest of this list of possible incomes, we have to decide if we have information about anything else here. So taxable refunds, credits, offsets, alimony, business income, capital gains, any of that. And the answer is no. We don't have any of these things that are particularly listed. But if we go back to our scenario for a minute, we do have information about the fact that Margaret won $300 in the lottery. Lottery winnings are considered income, and they must be claimed. And so, since lottery winnings or prize money is not listed as any one of these particular ways to get income, we have to list it right here in number 21. Other income, list type and amount. So we're going to put lottery prize, and we're going to list our $300 there. And everything else can be zeros, because we have no information for any of those other types of income. So now we're going to combine the amounts in the far right column for lines 7 through 21. So we'll add our 300 to our 76, 521, 1689, and 1644 to get a total of $80,154. All right, now that we know what our actual income is, now it's time to make some adjustments. Okay, so did we have any educator expenses? If you look on the scenario, it says that Margaret taught night classes and did have some educator expenses totaling $133, and so that's going to go in line 23. We were also told that the O'Sullivans had some moving expenses, and so we have a line for moving expenses here on line 26. So our $3,009 is going to go right there. Any of the rest of these items that are listed, we have no information about, so we are assuming they're all going to be zeros. Okay, and so now for line 36, we are to add lines 23 through 35, so everything in this column, and we end up with $3,142. And finally, on the front side here, line 37, we subtract line 36 from line 22, and we end up with our adjusted gross income, which is $77,012. Okay, and side one is finished. So now we're going to turn it over to complete side two, and we start by putting our $77,012 in line 38. Line 39 is where we check if Brian or Margaret were born before January 2nd of 1951. Again, we're assuming that based on what age you would have to be, since they have a child, probably not. We're also assuming they are not blind, since we have no information about that, so we're not going to check any of the boxes, and we're going to put a 0 right there for number of boxes checked. We also are not filing separately, so we can ignore 39B. And so now we are at line 40, which is your deductions. Now on a 1040A and a 1040EZ, you have a standardized deduction, a standard deduction that you're allowed to take based on your filing status, and you just put that number in and keep going. But on a 1040, you are allowed to itemize your deductions and to figure out what kinds of deductions you can make. You're going to use your Schedule A form now. So let's go to Schedule A. So the first thing that you are allowed to deduct are any non-covered medical and dental expenses. And notice the caution here. It says that you do not include expenses that have already been reimbursed or paid by others. So if you have medical expenses that have already been paid for by an insurance company, you cannot include those here as part of your medical or dental expenses. But let's say, for example, that you have an insurance where you pay 80-20, meaning the insurance company pays 80% of your cost, but you have to pay 20% of your cost. That 20% would be considered not covered, and you could include that amount here. Or if you have an insurance policy where you have a deductible, you have to pay the first $500, let's say, before the insurance company will start kicking in and helping you pay for the rest. That first $500 would be something you could include here. So if we look at the O'Sullivan's information, and we look down here at medical expenses, we are told that the O'Sullivans had $18,800 in medical expenses last year. They have an insurance coverage where the medical insurance pays for 80% and they have to pay 20%. Okay? And so that would be the first thing to figure out. What is 20% of 18,800? And that amount is going to be 3,760. Okay? Now, the next part says the IRS allows medical and dental expenses deductions for the amount that exceeds 7.5% of a taxpayer's adjusted gross income. And when you go to your form, your Schedule A, they actually have the steps set up for you to figure that out. However, notice that in 2015, the amount is a little different. It's actually 10% now. So we're going to use the numbers that are on the form. But they have that calculation set up for you. So we are going to start by writing down the medical and dental expenses that the O'Sullivans had to pay for. So that's that 3,760 amount, not the full 18,800. Okay? And then in line 2, notice that they're asking for the amount that we had on line 38 of our 1040 form. Well, line 38 is that first line at the top of page 2. That's our adjusted gross income. So $77,012 is what we're going to put right here. And then for line 3, they're telling us exactly what to do with that. We're going to multiply line 2 by 0.1, 10%. And then it says if either you or your spouse was born before January 2nd, 1951, you multiply by the 0.075 instead. Again, we're assuming that they were not. And so we're going to take 10% of our $77,012 and we're going to make that rounded off to 7,701. And so then line 4 says subtract line 3 from line 1. But if line 3 is more, then just enter 0. So based on these calculations, the O'Sullivans did not pay enough medical expenses out of their own pocket to meet the cutoff for being able to deduct this, and so line 4 is just going to have 0. So they're not really going to be able to deduct anything based on their medical expenses. Okay? The next category is taxes you've paid. Other than federal taxes, you pay state income taxes, you pay general sales taxes. If you have information to back up the kinds of taxes you've paid, you can use that as a deduction. And so if we go back to our explanation here, we are told that the O'Sullivans paid $3,298 in state income tax, and they also paid $3,567 in real estate taxes. So on our Schedule A, we can say yes, we paid income taxes in the amount of $3,096. And we also paid real estate taxes in line 6 in the amount of $3,567. We do not have any information about personal property taxes, so we'll assume that's 0. And we have no information about any other taxes, so we'll put 0 for that as well. And so now if we add up lines 5 through 8, we have a total of $6,865 that we've paid in other taxes. That we can include. That we are going to be able to deduct. Okay? The next category is any interest that you have paid. Most common place where you pay interest is on a home mortgage. You take out a large sum loan, you're going to be paying interest on that, and so you will get a 1098 form from your bank or whoever you have your mortgage with, and they will report to you how much interest you've had to pay during that year, and you get to deduct that. Oh, you know what? I just realized I put a wrong number in a wrong place. My total is right, but my number is wrong. Let's go back up here and fix this quick. This number right here should be $3,298. I apologize for that if I confused you. My total is still right. I just wrote the wrong number there. Okay? Because the $3,096 is how much interest they paid on their mortgage. That should go in line 10. Okay? Now, home mortgage interest that was not reported to you on a Form 1098, we're assuming that that didn't happen. Points, that's something that has to do with mortgages. We don't have any information about that. Mortgage insurance premiums, there's no information about that. And investment interest, no information about that we had to pay out. So adding all of those together, 10 through 14, we end up with a total of $3,096 for line 15. Okay? The next section is gifts to charity. So if you donate or give charitable gifts to any kind of organization, you can get tax deductions for that. They break it up into two categories. There are gifts that you give that are actual cash or checks, and then there are gifts that you give other than cash, but you need to have some sort of value amount to them. And so that's what we see on their explanation. We're told that they gave $987 in actual cash to charities. They gave $450 worth of old clothes to charities, And then notice this other bit of information. Because you are limited by how much you can give to a particular charity, a single charity, without having to do extra paperwork. And if we go back to our Schedule A, we can see that that limit is the $250 mark. Okay, so it says there, if the gift was more than $250, see the instructions. That's if it was to any one charitable organization, not in total. So our $987 in cash will go here, and our $450 in the value of old clothes that we gave away will go right there. And then sometimes, because of these limits, you may only be allowed to claim a certain amount. So you may have carryover from a previous year that you can include this year if this year isn't as large of an amount. We have no information about that, so we'll assume zeros. And so now if we add 16 through 18, our line 19 should be $1,437. The next category is a one-line category that has to do with any theft or loss that you sustained throughout the year. The example used for the O'Sullivans is flood damage, not covered by insurance. They had to pay for that loss themselves, and so they can deduct that. So our $9,230 from that information will go right there in line 20. And then we have the category where if you are making certain expenditures because of your job, you can deduct some of those. And so we've got in line 21, it says unreimbursed employee expenses. Things like travel, union dues, any education having to do with your job, all of that gets combined for line 21. So when we look at our explanation here, and we see here that Brian had $541 in job travel. Notice this is not driving back and forth to work because that is not tax deductible. It is driving within the job that is tax deductible. They also belong to unions, so they paid $1,439 total in union dues. And then Brian also took a couple of classes related to his employment, and so that can also be considered. And so we're going to add the 540, the 1439, and the 2315 to get a total amount to put in line 21. And that total is going to be $4,295. Okay. Tax preparation fees, we have no information on that. Other expenses like safety box or investments, anything like that, again, no information. So for 24, we're adding 21 through 23. So we're still at $42.95. And then notice this is one, again, where we are only allowed a percentage of this for deduction. So we are again going to put our adjusted gross income from line 38, which was our $77,012 again. And then for line 26, we're going to multiply that line by 2%. So 0.02 times 77,012 is 1,540. So now we're allowed to subtract line 26 from line 24. This time it is smaller, and so we can actually do the subtraction, and we end up with a total of $27.55. Okay. Last category is anything else that you think you should be able to deduct. You've seen it in the instructions that you're able to, but it's not specifically already listed here. You can list it in line 28 and put your total in that box. We don't really have anything else that hasn't been listed. And so then line 29 asks you, is form 1040 line 38 over $154,950? Well, no, it's not. Our line 38 is the 77,012. So if it's not, then we get to check the no box, and there is no limit on our deductions. Okay? And so we can go ahead and add everything that's been in this far right column, and we end up with a total of $23,383. And then line 30 says, if you elect to itemize deductions even though they are less than your standard deduction, then you are to check here. Okay? But if we go back to our 1040 form, our standard deduction for married filing jointly is $12,600. So even though filling out a Schedule A seems a bit tedious and there's a lot of work to it, and you have to have, receipts to back up all of these costs that you're claiming and everything else, but if you can put enough of those things together, you can significantly reduce your tax burden way more than just the standard deduction would be. So instead of the $12,600 for line 40, we are now allowed to put our total from Schedule A in that line, which was our $23,383. Okay? And then if we continue for line 44, we subtract line 40 from line 38. So now we're down to $53,629 as our income amount that we're actually going to find the tax for. Okay? And we're actually not done yet. Line 42 allows us to take our exemptions now. And so if line 38 is $154,950 or less, yes it is, then multiply 4,000 by the number in 6D. So remember, when we go back to 6D, that's this number. So we take our 3 times our 4,000, and now we've got $12,000 in exemptions, which we can now subtract. And so now we're down to $41,629. And now, this is what we go find on the tax table. So instead of the $77,000 amount that I had here at the top of the page, I'm now down to $41,000 that I'm actually going to have to pay taxes on. And so when you look that up in the back of the book in the tax table, we end up with a tax of $5,441. We have no alternative minimum tax, and we have no excess advance premium tax credit payment. And so when we add all of that up, our tax responsibility is $5,441. Okay, finally we come over here to this set of boxes, 48 through 54. This gives us a chance to take a few more tax credits and reduce our tax even a bit more. So we do not have any foreign tax credit in this case with the O'Sullivans, but we do have information about child care expenses, and it says we're allowed to deduct $780 for that. We do not have any education credits. The education was already included on Schedule A. We do not have any retirement savings. We do not have any child tax credit, but we do have residential energy credits. Those windows that they put in to save energy, those give you a tax credit, and they're allowed to claim $133 there. And then we have no other tax credits, and so when we add up 48 through 54, we get $913 for line 55. And so now we're allowed to subtract that from our line 47, and now we're looking at a tax amount of $4,528. So you can see all of these things make a difference in how much tax you're going to have to pay. And when you get older and you have more things going on in your life financially, these are all things to try to consider in terms of having deductions, having tax credits, and bringing down your tax responsibility. Now in the next section we have other taxes, and as you look through that list, we have no information about any of those, so we're just going to make zeros for all of those. So we're still at $4,528. And then we're finally to our payments. So now we are interested in how much the cable sports channel withheld. So that's right here. They had a total of $7,622 withheld. So we're going to put that in to line 64. 7,622. Okay. Again, as you look through the rest of these items listed here, we have no information about any of those. So we'll make all of those 0. So our total payment is going to be $7,622. And then since 74 is a bigger number than 63 is, we are going to get a refund. So we subtract 4,528 from 7,622, and we end up with $3,094 for a refund. How much do they actually want refunded? We're going to assume they want it all back. But again, there are options for things like paying it forward to the next year, things like that. But we're going to say they want it all back. And then the routing number and the account number, you can just make up some numbers there that would, normally you would put your own actual banking information there so that they could do an electronic deposit. But again, since this is limited information, just make something up. We'll say this is a checking account, and the account number okay, whatever. Just fill in some numbers to make it look like this would actually be a checking account. 77 asks the amount of line 75 you want applied to your 2016 estimated tax. We're going to say none. We want all of it back in a refund. Okay. And then 78 gets us into the next section, which is if we were to owe money, which we do not. So we do not have to fill that section out. And so if this was paper, we would now finish this off by signing. And so Brian O'Sullivan would sign today's date. So let's say it's 4/28/16. And his occupation is a cameraman. Daytime phone number, again, just make something up. And then Margaret. Okay. Margaret's a sloppy signer. and we'll say she's a sportscaster. And since we're going to assume these are smart people, we'll pretend they filled out their own insurance form, and so we are finally done. Okay? So it certainly takes a bit longer to fill out a 1040 because there's a lot more to take into consideration. But if you are someone who has all of those things to take into consideration, you want to be able to make the most of it. And so the 1040 form with the schedules is the way to go. So hopefully that compared to what you had. If it didn't, I hope you understand where you need to make the changes on your own form. You're going to get one more chance to try to fill out a 1040 form. So check out Canvas, see what problem you need to use, and then next class we'll be taking our test. So there's some review problems posted on Canvas as well that you can be working on to help you prepare for that test. Okay, and we will see you next class.